Are you looking for alternative investments in real estate? If so, I want to talk to you about investing in multifamily syndications, one of the best investments over the last 50 or so years. And the question is, well, what are the risks really, and how do you mitigate that risk? So I want to talk to you about that. And the answer is really picking the right operator and asking the right questions. So in this video, I'm going to talk about what should you look for in operators to invest with and what kind of questions to ask. Let's do this. Hey, my name is Michael Blanc, and I help people become financially free with real estate. I remember when I read Rich Dad, Poor Dad by Robert Kiyosaki, and I was a high income earner in the software industry, and I was very eager to deploy my money to get passive income. And there was this guy at our local meetup in RIA, and he seemed to know what he was talking about. He was there all the time, so I invested a bunch of money with him, and that project was a total loss. In fact, he got investigated by the SEC for the SEC fraud, and it occurred to me, I didn't really know anything about this operator except for him showing up once a month, and I never really asked him questions. And so I see a lot of investors doing that. They're very eager to generate passive income, and I think that's cool because you can get that with real estate syndications. You also can get unbelievable tax advantages as well. But I see a lot of investors getting and investing with operators, and they know nothing about them, and they're not really asking the right questions. So let's talk about each of those things. So what kind of operator should you look for? Well, the first thing you should look for is true operators. What I mean by that, there are people out there that are fund managers or capital raisers, and they are raising money for other operators. But the question again is, if you invest with them, that's fine. You trust them, you know them, you're asking the right questions. To what degree are they doing that with their operators? How many questions are they asking? And even if they're asking great questions, at the end of the day, they can't really control the investment. They're typically a minority stake in those. So look for operators who are actually controlling the assets that you're investing in. So that's really number one. Number two is, what is the track record of the partners? The reason I say that is because a lot of times syndication, there's a different mix of partners in every single deal, and you're looking for partners that have been doing business together. How long have they been doing business together? How many deals have they done? How many market cycles have they been through? Have they done some successful exits? So look at the partner track record. And then number three is communication and transparency. How are they communicating, especially up front before you invest? Are they putting out content? Can you find out about them about social media? When you email them, do they get a response? Maybe if you talk to some of the other investors, how is the operator communicating with the investors on a monthly basis, quarterly basis, weekly basis? What is that? And how accessible are the partners to your questions? And number four is, once we get into the deal level, is look at the deals themselves and look at the underwriting and how conservative are the assumptions. And I'll talk about what kind of questions to ask for on the conservative underwriting. But to me, so finding the right partner with the right track record who controls the assets, who communicates well, and then within the deal, how conservative is their underwriting. So in general, pick the right partner and all the details will take care of themselves. So think of the book Who Not How by Dan Sullivan and ask, if you want to do certain things, you don't have to necessarily know all the details. You just have to have the right who, and then you don't have to take care of the how questions. For example, what market should you pick in? What submarket? How big should it be? Which property manager should be involved? Those are all details that if you pick the right partner, will be taken care of. But you should still ask questions. So we talked about ask questions about the track record. We were talking about that as well. And look at the conservative underwriting, which was one of the things to look for. What about the rent growth, right? Why is that rent growth reasonable, unreasonable? Where does that rent growth come from? Is there any report that you can show? Is it maybe from your property manager? Same thing with vacancy. Where are the vacancy assumptions? For example, if we're going to do a heavy value add, right? Why is the vacancy only 9%, 8% of year one? When you're going in there and you basically want to turn the units over, it's going to take you 1 to 2 to 3 months to turn the unit over and then take you another month to fill up. Why would you maintain historical vacancy rates? It makes no sense. What about the exit cap? Exit cap is huge. Even a half point one way or another makes a huge difference. I see it's done all the time, 18% IRR, but look at the exit cap. It's lower than it is today. Well, why is it going lower? What are the assumptions besides it going lower? And it assumes, of course, that interest rates are going down. Well, what if they don't? Then it decimates the deal, right? So really in our underwriting, we want to see, depending on the environment, at least equal at cap rates. And if it's a little higher even, it's even more conservative. So what about the exit cap? What about the reserves? What about the cash reserves going in? The more cash reserves going in, the more equity you have to raise, right? The lower the returns will be, it's more conservative. What about maintaining reserves out of cash flow flow, right? If you have cash flow and I'm actually reserving $250 per unit like you should, well, it's going to reduce the returns. Therefore, I have to get a lower price. It's much more conservative. If I have a P&L that doesn't have reserves in it, well, of course it's going to be better, but it's also going to be riskier because you don't have the cash reserves. Ask questions about the business plan, right? If the plan is to increase rents, and you're doing construction, do the answers make sense? Are they achievable? You don't have to be an expert in multifamily value add deals, but say, hey, what's the plan here? Does the plan make sense to you? Then you might ask questions, well, gosh, what's your construction budget? Well, what about reserves on the construction budget? If it's a $3 million construction budget, what are your reserves? Well, the answer should be, well, at least 10%. Well, if the operator can't answer that, then you're like, does this operator really know what's going on? Is there even a construction budget? Ask them about the potential risks and, of course, their plans to manage them. But I find it very troubling when the operator says, no risks. We've done this so many times, there's really no risk at all. Like, I would run from that operator. The good operator is going to go, well, let me tell you what the risks are. Here's risk number 1, risk number 2, risk number 3, and risk number 4, and number 5. But here's what we're doing to mitigate them, right? So does the answer make sense as well? So there you have it. Don't be afraid of alternative investments. They are advantageous in many ways over the stock market and bonds. In fact, that should have a good chunk of your portfolio in alternative investments because of additional cash flow, the appreciation, wealth building, and the tax advantages. And so the two things to look for is to really get to know the operator, and that operator should be available online. You should be able to, to follow them around on social media, on YouTube, things of that nature. Number 2, though, they should be accessible. They should be able to communicate with you. So pick the right operator and then ask questions, not only of the operator in general and their track record, but also the deal level specifics. Again, you don't have to be an expert in multifamily, but ask questions, develop a curiosity, and see if the answers make sense. So we would love to be the trusted partner for multifamily syndications. It's something that's all we've done as partners at Nighthawk Equity. We've exited a number of them as well, and we're constantly looking for new deals, and we'd love to have you partner with us. So book a call and let's have a conversation. We'd love to make available some of our upcoming opportunities. There's also a variety of educational material on our YouTube channel, social media, and blog to educate you about alternative investments. But yeah, we'd really love to have a conversation with you. So go ahead and book that call anytime, and we'd love to have you on our next deal. Catch you next time.